So you are welcome to this lecture. In this lecture, we are looking at session 3 of unit 4. In session 3, we are looking at specific internal control procedures. Specific internal control procedures as part of unit 4, which is talking about the internal control systems. At the end of this session, you should be able to outline the control procedures that will be appropriate to key control risk areas of a business entity. And that is the objective that must be achieved at the end of the lecture. Now let's look at the key control areas. Now, every organization or as an auditor going to audit a client, you need to consider certain key control risk areas. There are certain areas that are having risks or high risks, so as a result of that, you need to put in some key controls. So you have to look at the general financial arrangement. You look at the cash and checks received and paid to see if there are some risks associated with that. You look at the wages and salaries that are paid to the employees of the business. You look at the purchases and the trade debtors to see the purchases that were made as well as those that goods were sold to on credit. Then you look at your sales and trade debtors as well. Then you look at your stock and then the work in progress, any fixed assets and investments. So these are some key control areas that must be looked at when performing the audit. Now let's look at the internal control systems relating to sales. Internal control system relating to sales. So we have the first one to be ordering. Now with ordering, what are the internal control system we have to put in place? So the orders should be checked against the customer's account, and this should be evidenced by initializing by a responsible official. So this has to be initiated by a responsible official, and then any customer will be referred to the credit control department. So if you want to make an order, this must be checked out with the account of the customer to see if things are really in place. Now, existing customers should be allocated a credit limit, and it should be ascertained whether the limit is to be exceeded and if the new order is accepted. So you check the limit of this existing client, their credit limit, that if the new order they are placing, if you finally deliver the new order to them, is their limit or are their limit going to be exceeded? Then you check for all these. Now all orders should be recorded on pre-numbered sales order document. They should be recorded on a pre-numbered sales document. Now, then all orders should also be authorized before any goods are dispatched. So if there has not been any authorization, the goods cannot be dispatched. Now the sales order should be used to produce a dispatch note for the sales. So there has to be a sales order which has to use to produce a dispatch note for the goods outward department. So that must be sent to the goods outward department. Now when you come to the second order, internal control system relating to say is dispatch. Now they have made the order, so you are now going to dispatch the orders to the customer. So dispatch note should be pre-numbered and a register should be kept of them to relate sales to invoices and orders. So there has to be a dispatch note on that. And goods dispatch note should be authorized as goods leave and checked periodically to ensure they are complete and that all have been invoiced. So when the goods are being discharged now or dispatched now, there has to be a goods dispatched note and this note should be authorized as the goods leaved the office or the premises or the storehouse, and they should be checked periodically to ensure that they are complete and that all have been invoiced. Now, the third control when it comes to sales is invoicing. You invoicing the sale. So the person made an order, you have to dispatch it, and they have to also provide some kind of invoice. So invoicing the sales. Now, sales invoices should be authorized by a responsible official and then refer to the original authorized order and dispatch note. So the person who is authorizing this must refer to the original order note that has been authorized or the dispatch note. Then all invoices and credit note should be entered in the sales day record. That is the sales ledger and then the sales ledger control account. So the batch total should also be maintained for the other purposes. Now, the sales invoice and the credit note should be checked for prices, cast, and then calculation by a person other than the one preparing the invoice. So there is a tendency that there might be some mistakes. So another party has to come and then cross-check the prices for these credit notes and then the sales invoice. And then any cast and calculation must be done by another person who is not the one preparing these invoices. All invoice and credit notes should be serially pre-numbered, so there should be a special number to regulate the sequence and then to check if they should be carried out. So there should be an invoice number attaching to each of them. Now, credit note should also be authorized by someone unconnected with the dispatch of the sales and ledger function. So it should be authorized by someone who is not part of the dispatch team. So that is basically about the sales invoicing. Now, when it comes to the sales return, now with the sales return, any goods that has been returned by a customer should be checked for previous damage, and when accepted, a document should be raised. So there are some tendencies that the customer will return the goods. So when it's returned, you have to cross-check to see if it is the same as it was given to the customer. It's not having any defect. So if it's having defect, then you don't accept that one. So basically, these are the four main steps or process that the internal control system relating to sales release. It starts from ordering through to dispatch of the order, then invoicing it, and then if the customer is not satisfied with the goods and has to return it again, so we call it the sales returns. Now let's look at the internal control system relating to purchasing systems, the one relating to purchasing system. And as usual, it also starts with ordering. So we have to issue a requisition note for purchases and then they should be authorized. So it is now you, the entity, going to place an order to buy goods. So you have to place the order and this order should be authorized. Now all orders should be authorized by a responsible official whose authority limit should be predefined. So you should have a limit. If what you are going to order, the amount is above your limit, then it has to move on to the next person. Now, major items such as capital expenditure should be authorized by the board. So the board has to do this authorization. Now, when we come to receipts and of goods as the second step, the receipt of goods. Now what you have ordered, you have now received them. What are the internal control system that has to be implemented? So goods inward centers should be identified to deal with receipt of all goods. So you have the goods inward center, and these people have to be identified to acknowledge the receipt of the goods. Now, all goods should be checked for quantity and quality. So, when the order is delivered to you, now you have to check if it is the quantity you want and is it having the right quality. Now, good received note should be raised for all goods accepted. So, the moment you have accepted the order, you have acknowledged receipt of the goods, you have to issue what we call the um, goods received note, the goods that has been received. So goods received note should be issued when the order has been accepted. Then we come to invoicing and returns. Invoicing and returns. So purchases invoices received should be stamped and with an approval grid and given a unique serial number to ensure purchases invoice do not go astray. So there should be a special invoice that has to be raised when with appropriate approval so that these serial numbers make it so unique so that they do not go astray. So any purchase invoice should also be matched with the good received note and should not be processed until this is done. So you have to get the purchase invoice ready together with a good received note so that they match until it is done. You don't process the item. So we are also basically saying that the invoice should be checked against the order and then the good received note and chart. And if any extension should also be checked at the end of the day. Now, when we come to the last one, which has to do with the purchase ledger and suppliers, the purchase ledger and suppliers basically has to do with a control account which should be maintained and regularly checked against balances in the ledger by an independent official. So the purchase ledger control account must be kept and then regularly checked against any balances in the ledger. Now, when this happens, the purchase ledger record should be kept by a person independent of receiving the goods, the invoice authorization, and payment routine. So the person who has to keep this ledger has to be independent of all these people. And then the statement from supplier should be checked against the purchase ledger account. So any statement relating to the supplier should be checked with regards to this. When we come to, or when we are talking about the internal control relating to purchasing system, this is the procedure it has to follow: ordering of the goods, receipt of the goods, then invoicing and returns, then we have the purchase ledger and suppliers. Now, so let's look at the internal control system relating to payroll systems. With the payroll system, now payroll simply cover employment records, the attendance, the payroll functions, and then the salary analysis. That is what the payroll system deals with. Now, we have some risks associated with the payroll. So it is possible that there will be an invalid or an authorized payment to staff. Then failure to make payments on timely basis also result in staff dissatisfaction. So when the salary delayed for a time. Then when there is also a delay, or it could happen that there will be delays or errors in amendment, deletion to payroll records, resulting in inaccurate payment. So if they took some people or names of the register or the payroll, there are some amendments, it can also result in some inaccurate payment. There's also a possibility that the data that is loaded could be corrupted. So the data could be corrupted. Then we have an authorized access to the payroll system. Some people can gain access to the payroll system without being authorized to do so. So these are some of the risks that are associated with the payroll system. Now let's look at the control procedures that are supposed to be put in place. Now, first of all, there has to be approval and control of documents. There have to be approval and control of document, and this we are basically saying that there should be a written authorization to employ or dismiss any employee in accordance with the company's procedures and legal requirements. So if you have a change in rate of pay, should be authorized by writing by the human resource department, and this must be reflected. Now, if there is any overtime worked, this should be authorized by a responsible official in accordance with the entity's procedures. Then an independent official, preferably the CFO or the CEO or the HRD, should check the payroll and sign it. So these are some approval and control of document that must be tackled with. Now the other one has to check the arithmetical accuracy of the transaction. So we are basically saying that the payroll should be prepared from time recording system and a sample checked for accuracy against the current rate of pay. So there should be some kind of arithmetical accuracy which cross-referencing or cross-checking should be made. And the third thing has to do with the control account. So basically control account should be maintained in respect of deductions showing amounts paid periodically to the revenue authorities, the trade unions, and what have you. Overall checks should also be carried out to highlight major discrepancies. Example, you check against budget, changes in amounts paid over a period of time, you check against the personal records and code. So these are what must be done. Then the other control relating to the payroll system is access to assets and records. Access to assets and record. So you ask yourself as an individual where employees are paid in cash, there are a number of specific control procedures that has to be followed. So you look at the access to these informations and co. Now employees should sign for their wages. When it comes to salaries and co, they should sign for their wages, and then no employee should be allowed to take the wages of another employee. No employee should be do that. And when wages are claimed late, the employee should sign for the wages. The employee should sign for the wages. So these are some access to the assets and records. Now when you take the salaries as the last one, we are saying that the personnel record should be kept similar to those for hourly paid employees, and then written authority should also be required to employee or dismiss an employee or to change the salary rate. So these are some of the things that must be considered when we are looking at the control procedures relating to the payroll system: approval and control of documents, arithmetical accuracy, control accounts, access to assets and records, and then the salaries. Now let's look at control procedures relating to the cash system. The cash system. Now cash system refers to the cash and check received and payment. So entities should endeavor to conduct all their cash transactions by means of check or other forms of bank transfers, as controls over check transactions are easier to establish and maintain. So if these are easier to establish, it's encouraged that entities do that. Now we have certain control objectives when it comes to the cash system, and then the control of cash is of prime importance to every business, and that is a fact. And the control objectives are that all sums due to the entity are received and subsequently accounted for. No payments are made which should not be made, and all payments and receipts are promptly and correctly recorded. In addition to this, it's essential to consider detailed controls for each area of the entity dealing with cash. that is the expenditure centers or the spending unit. All this must be considered as the control objective. Now let's look at the control procedures. What we look at is the objective. Let's look at the procedures. So there has to be control over the cash and receipt by post. You have to have control over the cash collected by salespeople and travelers. You also have to look at the control over cash sales, that of over banking, over check payment, bank reconciliation, control over petty cash, and what have you. So there has to be some procedures, and under each of them, there are specific things that you are supposed to do as a control procedure. Then we look at the control procedure relating to inventories. And with the inventories, we have to look at the approval and control of documents. As usual, you have to look at the arithmetical accuracy. You have to look at the control account. You have to also look at the comparison of assets to records, access to assets, and other records must also be looked at. So, for example, when we take approval and control of document, we are saying that issues from inventory should be made only on promptly and authorized requisitions, and reviews of damaged, obsolete, and slow moving inventory should be carried out. So each of them and what they discussed or what they talk about. Arithmetical accuracy, we are looking at that all receipts and issues should be recorded on inventory cards. It should be cross-referenced to the appropriate good received note or the requisition document. So let's look at the internal control relating to PP, property, plant and equipment. And as usual, we have certain objective. The control objective has to ensure that fixed assets are correctly recorded and adequately secured and properly maintained. And acquisition and disposal of fixed assets are properly authorized. Then acquisition and disposal of fixed assets are for the most favorable price possible. So they have to offer the most favorable price possible. Then fixed assets are also properly recorded and appropriately depreciated, and then the written down value when necessary are also provided. So these are some of the control objectives of the PPE. Now let's look at the control procedures over the PPE. Now your annual capital expenditure budget should be prepared by someone directly responsible for to the board of directors, because you are looking at capital expenditure here. And then such budget that has been prepared and presented to the board, if acceptable, be agreed by the board and minutes. Application for authority to incur capital expenditure should be submitted to the board for approval and should contain reasons for the expenditure, the estimated cost, and any non-current assets replaced. And all these procedures must be followed when it comes to PP. Now the control procedures for small entities. We look at the control environment, the risk assessment process, the information system of those entities, their control activities, and then the monitoring of controls. That is relating to small entities. So in summary, we've been able to outline the control procedures appropriate to key control areas, risk areas of a business entity. There are lots you need to read and get the concepts under each of these control systems, be it cash, purchase, inventory, PPU, payroll, what have you. Try to know what goes into detail. Thank you and see you in the next session.